Hey Devika, how are you?
I'm very well, Shafeekh. How are you doing?
Good, good, awesome. I will just give an introduction about Devika to audiences. Devika is a founder and CEO at DR Partners. She's helping startups in the region with their legal matters and company registration in UAE. So Devika, I wanted to hear more about DR Partners and about you from you.
Thanks, Shafeekh. It's a pleasure and an honor. And thanks for your initiative to come up with such a podcast. I'm sure it's going to be quite helpful for founders, and especially founders like yourself. And I'm on the club too. It's good to be a part out here. Mm, it's like you said, yes, DR Partners is a boutique corporate advisory, a succession planning firm primarily set up to assist founders like yourself who are coming into the region who need guidance right from a structuring, be it legal, corporate, to different stages, which includes getting them operational and also to have them up and running and help them with their market entry as well as growth plans, which requires, of course, raising capital. So that's been what DR Partners does in a nutshell. And then, of course, we can discuss it in detail later.
Awesome. And I think you are also part of like couple of startup advisory board. What's the story behind it? Like how I think you are helping some of the startup to raise funds, and I have seen that you have been on board of ARK Global,
Yeah.
Art Global.
Yes. So, like you rightly said, when I moved out and set up DR Partners, the whole idea or rationale behind setting up such a firm was to help and be a one point or a one stop shop advisory firm to help founders across stages of growth. And when I started uh, working for companies previously, we restricted ourselves only to company setups and beyond that, or structuring, and beyond that, we never bothered. And I realized that was an opportunity and there was a gap because the families who were the ultra high net worth or the family offices that we were catering to were the actual ones who were also supporting startups as either as angel investors in different stages. So when I realized that ultimately we are a common bridge between startups and such investors and family offices, DR Partner tries to bridge that gap. We thereby create identified such opportunities, and because of my legal structuring and corporate background and also my experience in this industry since 2007 led me to take on selective mandates where along with Dr. Bhaskar Dasgupta. Of course, you met him at the Abu Dhabi Finance Week. We advise startups, we mentor them. I take care of the legal corporate aspect, including the operations strategies with regards to market entry. And like you rightly said, the whole idea is then to help them grow. And for growth, you also need not only a market expansion and a clientele and a customer base, but also access to capital. So we try and connect these startups that we advise on and help them raise capital from these family offices or angel investors, depending on whichever stage they are in.
That's very interesting because I think mostly like most of the family offices they are not well aware of the investment opportunities in startup ecosystem, right? You must be like connecting to a lot of family offices, and they don't have much awareness about how much the better the investments in startups are compared to other asset classes. So they could also allocate a couple of portfolio or a fund into startups, which is great. And I think you are doing a great job there to convince them to invest in startups.
Thank you so much. Yes, it's not an easy task, especially for conservative family offices. And I think my biggest challenge is even to get the mandate across to the principal, because when you speak to the investment officer or the family office head, they have their own views about startup. But what the drastic change that I've seen, and that's also thanks to founders like yourselves who have come up with such unique propositions, financials, I'm sure, is such a startup which is promising. And when they see the kind of value add that a startup brings in, yeah, from their model, be it a fintech, edtech, e-commerce, any platform, and the revenue and the returns that the family offices have actually started seeing, I think is slowly helping them build confidence, and they are looking at larger ticket size of investments. Previously it was always a trend to say that, okay, fine, there's somebody in my network who's invested, and then I bring in somebody else to invest, and that's how it would happen. But now it's more getting more formalized, and professionals like myself, we make a constant effort to try and educate them, help them understand, and help them with constant deal flows which suit their requirements. So today I was with a family office wherein they're already one of the market leaders of automobile insurance, healthcare. And when I discussed my portfolio, they seemed quite excited, saying that, it's not only about returns, but if it can be a value add to our portfolio, why not? So there is a slow shift that I see, and which is positive.
That's interesting because I think like if you look at some of the good families, big families here in UAE, so they have been like blended towards startups in recently, like Noon and a couple of companies they got acquired, Imar Group. So it's brilliantly done, and also how they integrate their forward markets or their backward markets, which is also like giving a new generation of or innovation recipe into their conventional business models, which is awesome. Yeah. And how do you see, like, like for me, I have a very basic question, Devika, just to understand as a lawyer. Whenever wanted to meet a lawyer, I just wanted to understand, because I'm so confused when I came to Dubai to set up my startup here. Like, there is mainland, there is free zone, and there is ADGM, there is DAFC. Like, I'm so confused to where to go for. Like, what would you suggest for a startup like us? What's the best way to register a company? Imagine we have investors on board, and we need to manage their shareholdings as well. So what's the best advice you have?
So I think a couple of factors which goes in, and first and foremost, Shavik, I would say that majority of founders like yourself are they switched on. They have an understanding of what are the offerings, but there's so much of information out there in the public domain that it can actually get very confusing. Even when there's so much of literature which can be very educative and informative. Um, the right structure, like you said in the last bit, is what I'm going to emphasize on when you have investors, and exactly what would be the case for every startup. Very unlikely that you would have a startup journey wherein the founders are pulling in money throughout till a stage wherein they are self-sustainable. They will have to be the investments coming in from different streams. So, like you said, yes, UAE, though there's been so much of support from the authorities to try and promote startup ecosystem to attract new skill sets, new visas, etc. A question which generally which needs to be asked is one, where exactly am I getting licensed? So, do you have to be in the mainland? I'll just give you an overview without going into too much detail. Maybe at a stage or for a startup, you do not have to be in the mainland. Why so? Primarily because you wouldn't actually start when you are at the startup stage, the infancy stage. What you need is an entity or a form which can actually help you to start contracting, sign up MOUs, depending on your agreements, your investment agreements, etc., for which you need to have a legal entity. Now, quite obvious for startups, major issue is cash and capital. So you don't want to blow up money in licensing. And unfortunately, while the ecosystem is very supportive, license also and your real estate comes at a cost. So what every founder needs to keep in mind is that one, which is the most cost effective structure, undoubtedly, because let's not forget that there's an operational aspect. But at the same time, you cannot jeopardize your entire base. So the foundation has to be strong. So
Mm,
what you could get is, especially because of the umpteen number of free zone that's there, depending on your line or service of business, one could look at a free zone which gives you 100% ownership. Of course, in the recent amendments, a lot of mainland companies and activities have also been allowed 100% ownership. But till you are in a state where you are actually looking to do business in the mainland, one could rely on a cost effective option like a free zone
mm,
that also helps you provide residency. Like, say, for example, Shafiq, in your case, the most of the founders would want to come in, live, reside, work, employ people. So you need to have an entity which can take care of not only your residency requirement, but also your family's residency requirement, your employees as well, because there's an entire um, you yourself with
yes.
these employees joining hands is becoming a larger family, isn't it? So that is the second aspect to be looked at. With corporate taxes coming in, I don't want to scare and digress the entire topic, but that's something which I get asked. And just today, I read an article which talks about startups being given a lot of exemptions. So that's a huge relief, especially for all the startups out there. And I've been in on and off calls with the startups that I mentor, where they've been asking me the same questions, like, because some of them have already started coming into revenue and a 9% corporate tax is going to get affected. So that's a relief for startups, I would say. And the last part, Shafiq, which you raised was with regards to ADGM. Abu Dhabi Global Market, or ADGM, is of course has got very interesting propositions or solutions, and especially one of the most cost-effective one could be the special purpose vehicle.
Yes.
But what one needs to keep in mind is that if you are really looking at having a just an entity or a holding company, the SPV regime really looks and is very favorable. But if you intend to actually create your business and have an operating company eventually to start selling your product, your application, you wish to have a subscription arrangement, then I wouldn't think ADGM works out quite well. You might want to still look at a free zone where the concerned free zone gives you an appropriate license to carry out such activities, so that at this stage of incorporation, or when you start off the startup journey, you don't end up having too much of a cost that you incur. However, one very, very important aspect, and which is what I liked when you touched upon the investors, many a times you wish to have multiple classes of shares. Founders talk about very fancy safe notes, and there are different arrangements that you wish to provide and factor in. Free zone may not necessarily be geared up to provide such solution. Hence, you may want to look at a common law jurisdiction like a DIFC or an ADGM, or slightly more robust free zones where the regulatory framework is supportive.
Okay.
That's how.
That's something interesting that I'm not quite aware of how the structure works, because I did a mistake. I went and registered in Delaware first, and then
It's
figured
an
out.
experience. Let's call it an experience, Shafiq. We're all
So
learning.
yeah, it's all learning. Yes. So then I have been like I have in my previous role I have registered a company in Cayman. So I'm
Mhm.
just like quite confused. Like, how do you prefer like a company from Middle East? What's the best SPV vehicle that you can go for? Is it like Cayman, or is it BVI, or is it ADGM? Since I think ADGM structure is very well flourishing now, in order to match the startup requirements, legal structure.
So I would break it into two parts, Shafiq, and that's very important for every founder to keep in mind. What you need to look at is ultimately one, your operations, two, very importantly, your IP. because today it may not look very, very important, but ultimately you need to structure your IP quite well. So a BVI, Cayman, and all of those offshore jurisdictions, erstwhile, I would say, were a very good solution as a holding company regime. Even today, you can look at that as a holding company structure, but eventually you still need to have a local entity wherever you wish to have your business of operations. So you might be targeting GCC, but you still need to have your licensed entity somewhere. You need to hold your IP. With regards to ownership of IP, BVI and Cayman or any of those jurisdictions that you could think of, which is offshore, is no longer an option at all, primarily because there's economic substance regulations which has been brought in. So your IP has to be structured very well. The second part of it is, say, sorry, were you going to ask me something?
No, no, I'm just listening.
Sorry, yeah. So the second part of it is to say that if in case you're actually doing operations in UAE, then you might as well have a domestic structure, which gives you the flexibility and a regulatory framework which is required and which is a common law framework, which is what majority of expats, especially in this part of the region, prefer. So you and me as expats, we would want to be governed by the common law principles. That's where, like you said, in ADGM is and the holding company regime or the SPV regime is working very beautiful. It's cost effective, it's common law principles. ADGM has a separate code that governs. So, for an expat or somebody who's coming in, they've started to realize that it makes more sense to have a holding company which gives them a lot of flexibility at this stage and also the protection that they want. And also, very, very importantly, especially in this part of the region, which people do not keep in mind or factor in when they set it up, like say Cayman, which you did, UAE to accept, or any authorities except for DIFC and ADGM, to accept a foreign company document, those entire documents have to be legalized, and legalization has a very additional cost. So that's the same case for even bank accounts. You can't open an account, and what joy in having a company if your account cannot be open. And for you to have an account open, if you have to go through a legalization, which costs you around 5,000, 6,000 odd dollars, that's going to create a deep pocket, a deep hole in your pocket. So that's another aspect that founders need to keep in mind. So I personally believe that the charm BVI and Cayman or Delaware or any other jurisdiction for that matter had in the past is slowly decreasing. Now it's a homecoming, the way we call it, where given a choice, you would like to create an entity or a holding company along with your operating company, which helps you create substance and also lesser cost, lesser footprints globally, unless there is a need for you to do so.
Okay, that's quite interesting. I think because recently, like a lot of companies are putting up based in ADGM, which is like an SPV. Like some of the VCs I spoke, they said me that you go and register in ADGM, your SPV company, that's gonna help you. But how flexible it is in terms of governance, how flexible it is in terms of cost or legal cost of managing the convertible notes or any other challenges that come across.
So, ADGM as a jurisdiction, the basic principles are common law principles. Setting up incorporation is, I wouldn't say a hassle, but the regulator is quite keen on ensuring that the compliance, the AML requirements, the KYC, the onboarding process is robust. So there could be certain, I would say, a scrutiny which goes through for every application, and hence there could be resultant time delays. But compared to a lot of jurisdictions, I would think cost-wise, ADGM might be slightly more expensive if you are especially comparing it to a BVI or Cayman. So that's as far as cost is concerned. However, but that's also the brand that you have, isn't it? UAE, nothing is cheap. So you could just allocate that to a mid-shore jurisdiction and a reputed jurisdiction like ADGM, which of course attributes to the cost. The second part is governance. Again, there aren't too many um, statutory compliances to be met with, but gone are those days because when I got into this industry, we hardly had any filings, license renewals, and we never used to even see the shareholder or director. But now the times have changed. You have your ESR reporting to be done. There are across different jurisdictions. You have your UBO declarations. So it's growing, and I would like to believe accounts have to be maintained, and on a from the second year onwards, ADGM SPVs have to file their annual accounts. So these are certain basic requirements of compliances to be made and met with. So that's the second part. And the third part, with regards to how easy is it to convert any form of share transfer, any conversions or corporate matters, you have a very robust professional network that is handling these matters for founders. So yes, we regularly get clients who come in and ask us for such support services, and we do provide such services, and that's across all the service providers in ADTM. And of course, cost, it would be a bit difficult for me to generalize because every provider would have their respective costs, and the bigger law firms would, of course, have a brand cost attributed.
Yes, yes, and also I think it depends on the companies, right? Like if it's a fintech, they might prefer to go to DIFC to try it out. So this could be like depends on the company, what nature of business they have, and I think they also have certain structures based on the type of the company, right? Like I've seen this, some of the fintech companies need to file the AML compliance, and they need to have an authorized finance officer. What do you see like this? Is it like across all companies, or is it like only for fintech companies? And
So, regulated entities, I would just touch upon, not rather than directly jumping onto your question. Regulated entities, of course, have an MLRO, your risk officer, depending on whichever free zones. But on the other hand, fintech companies, see, the whole idea, let's not forget, is is to ensure that every company, be it in the be it fintech, your Hub 71, or any such platform which is encouraging, the whole idea is to make sure that the entity is following certain basics which is required. So these are checks and balances which are being put in place, which is in the long run actually good for the company itself.
okay, awesome. And and so I generally see like in other regions, especially if you look at Silicon Valley and Delaware, there are a lot of startup lawyers out there. But if in Middle East, it's very less. Like those you find who understand the startup ecosystem is very less. Even though you could find like a lot of incorporation companies set up platforms out there which are automating a lot of this task, but end of the day, like any startups would like to go to a startup lawyer to understand the whole comprehensive structure of it, so they can get more of a personalized advices, suggestions, how you want to like structure. Because I was not very sure of the IP part of it, which you have mentioned, which I need to look into in the long run, there where my IP gonna register, where it's gonna get protected, where my trademark it's gonna protected. These are the long term concerns which we don't look into now. But uh, but this is something very interesting that whenever I come across startup lawyers based out of Middle East, I will have a lot of questions regarding the structures, governance, and it's very interesting that last time when we met, I was like, yeah, let's go ahead, what's the best way? Because I have been getting a lot of advices from a lot of people, like go register here, go register here. I've been like trying to figure out where should I exactly register my company last 5 months. So I immediately, like first I came here, I registered in US, which is fast. then I figured out it has a lot of tax nuances down the lane. So which UA is the best to go for that in order to have a setup here locally, that is the best feasible way. Yeah, but I still have, like, I got some time to figure out since I had a company registered initially. So this is something interesting. Like, how do you see the startup ecosystem here in Middle East? How like the governance structure in the future? How it's gonna looks like in the future? How, because especially like some of the, if you look at the US itself, like the governance is a big question when they go for later stage, because Middle East still in an early stage for startups, but the matured or flourished ecosystem have the governance in place when they scale. And we have seen some of the cases like Uber, when it went for IPO, it was down because of a lot of governance issues. So now even look at FTX. So how do you see that, like UAE is, or Middle East especially, is evolving in terms of structures?
So, two couple of points that you touched upon, Shafiq, and it's very interesting because as a lawyer who advises startups myself, and I've been doing this for the last 15 odd years, it's just that the startups weren't at that point of time called or had this fancy term of startup. It was a business that you had an idea, you decided to set it up along with somebody like-minded. So as the terminology has been growing and becoming very prominent, so is the ecosystem. So I would think it's not fair to compare UAE to US to an extent because it's a relatively newer economy. Let's not forget that. But I take great pride to see that the way this country has grown and generated the number of startups, and you see the success stories of Kitopi. So, of course, you've got your FTX and other places. But if you look at Kitopi, you look at Kareem, you look at any of those top startups, these are all success stories which has happened here. And yes, it is. So, first part of your question was, do you see too many lawyers? See, there's always, we are like those, we the honeybees, where we smell honey, the lawyers will start coming in. So, I think there is a slow change right now. There are, say, for example, DR Partners itself. Previously, I used to work for and represented firms which you just touch upon one aspect of it. But today you have specialized firms that take care of every aspect. So DR Partners, like if I was to talk about myself, I get involved right from the onset stage wherein I am through this journey. I'm trying to walk through this entire journey, handhold the founders to make sure that their governance, corporate administration, all of those aspects are taken care of. And there are umpteen number of providers like myself, like right from a bigger brand to across whatever is the appetite of a clientele. So there are professionals and it's growing. And trust me, I can see the number of firms that's mushrooming. So this professional support system, it's going to get more and more sophisticated, polished, and they would be providers to guide you and advisors. There will not be any shortage. So that's the first part of it. Secondly, how does this curve look like? For me, it's quite positive myself. There is an access to capital. Yes, of course, there are times when access to capital also becomes very difficult because everybody who is taking a plane onto Dubai just feels everybody's sitting in a gold mine and they're just giving away cash. It doesn't work that way. But still, there is a willingness to try out private equity investments. There is a willingness to make investments, look at alternative modes. So that's another positive aspect. If you look at Abu Dhabi, Dubai, it's a healthy competition, the number of incubators coming up, the number of accelerators coming up. And I know this because I have been personally involved in advising setups. And you did mention about VCs being set up in ADGM. Why so? Because the regulators have provided for an easy and a relatively quicker or a slightly more flexible VC fund regime. So there are it's mushrooming, and these are all incubators and accelerators coming in and VCs coming in because there is a huge startup opportunities and deal flows that they see. So I think overall it's quite positive, and I don't think there's going to be a shortage of professional advisors. You just need to engage us.
What would be your like advice for a founder who is coming here, like in terms of like setting up the governance structure? How do you see, like, at least top three things that you need to take care of in order to make sure that that your governance is not flown down the lane?
Okay. So I think the first and foremost is the right foundation. Like I said, yes, I emphasize on several aspects, cost being one, but doesn't mean that you do a stopgap arrangement. When you read up so much about several aspects, like say your example, I think I heard you say that you set up a Delaware structure because quite obvious it's not about speaking to anybody and everybody. There are professionals. It's like you go to a specialist doctor because the doctor, of course, has got those many years of experience. So the foundation has to be set strong. That's important. How do you set your foundation? It's your license, the entity type, where you get your license done. That's very important because from their experience, these advisors can tell you what could be and should be done for a starter. That's the first part of it. That's the incorporation stage. The second stage is the governance. Quite obvious. You need to the whole idea of trying to create again independent advisors, and that's another aspect that I look into is where we try and help these founders connect with strategic advisors. It could be founders of companies who've exited, they've done multiple exits, come into money, they have actually gone through that entire journey. So try and seek uh, so I wouldn't say it's always a professional advice right away after your incorporation because you have to control and make sure your costs are taken care of, but certain basics which needs to be done. There are a lot of firms that is providing such services, if it means even a regular meetings, ensuring your books of accounts are maintained. It could be a simple ledger, an Excel sheet, which is with regards to your accounts, or even if it means administration, try and document and keep it in place. That's very much required. And you do not, I always see a lot of stopgap arrangements coming in wherein the founders are quite desperate to get the money. They get a commitment. There's cash taken into the individual account, and there's one company. It's going to be difficult going forward. So take it easy. You need to encash the opportunity, but just do not try and do a bandage arrangement. It's like the plasters would start coming off. That's not good.
Awesome. Cool. So I think it's very interesting session, Devika, about explaining the process and fundamentals of governance structure here in UAE. And I wish all the best. I think we are running out of time now. We just have 5 minutes left. I wish all the
But
best.
thank you so much, Apik. It was really nice to be a part of this discussion. Happy to be engaged and happy to guide and mentor. It's a journey, and I wish every founder who is an audience to this podcast all the very best. May your venture and including financials be a huge success. Good luck.
Thank you. Thanks a lot. Bye bye.
Take care. Bye bye.